ain't ashamed of trying to make a wage now. Money, 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 money makes the world go round. I need money, 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 money. Money got me feeling down. They said go and chase the dreams, but never told me that I have to wake up.
Hey, how are you doing today? Welcome to another Money Conversations with Mars. This is Marshall Weeks, also known as Coach Money Mars, here with you. And so last week we discussed the difference between life insurance and income protection. We also really took a deep dive into, why term life insurance, what is term life insurance. We discussed the different riders that can be added, and we discuss the purpose. So remember, with term life, we discuss the reason why you get term, how we should not ever aim to live off life insurance. We don't want to be worth more dead than we are alive. With the term life insurance policy, your financial person should create a financial plan for you to have at least the amount that you're carrying in life insurance in your investments. Your investments, that's liquid money that you can pull out. Now, obviously, some of us probably know that when you pull money out too early, you would need to know the terms of your investment accounts. But if you pull the money out too early, it will be taxed as income. And a perfect example of that is for those who have ever borrowed from the 401k. And borrowed is the incorrect word. For those who have pulled money out and chosen not to pay it back through their paycheck, come tax time, you would have received some form of 1099 dash. The letters mean different things based on where the money's coming from, and you would have paid tax on that like income. Does that make sense? So a financial plan with investments, that's your money that, you don't have to pay back because it's yours. You put the money in. So a good financial planner isn't just going to get you insurance. They're also going to show you how to have that amount of money. I truly believe anyone that would sell you an insurance policy and not show you how to build a nice nest egg for retirement really doesn't have your best interest at heart. And I'm saying that because I don't have an insurance agent. I have a financial planner, and it is a difference. I don't want just to have insurance, but what happens at the end, when I'm ready to stop working? Am I going to have to get another job, or will I be able to live off investments? And that is very, very, very important, because eventually you like to stop working, or it's different working when you don't have to. That's a completely different thing. So let's jump back in so I can review income protection versus just life insurance. So if you give me a second, I'm sharing my screen and we will go back to the notes. This time I'm going to type it out just in case someone is taking notes. So remember the acronym DIME, D standing for death. And, I said that you would probably want about $15,000 to $20,000 to pay for a funeral. Okay. Then income. We talked about how for income, we want to leave at least 10 years of ourselves for our loved ones. So what does that mean? If you make, $80,000 a year, a good 10 years of you, that's $800K. Okay. Then mortgage. You would look at the payoff of your mortgage, and whatever that says, that's what you would add on to that amount. And then education. Are you planning to pay for kids' education if you have them? Are you planning to put away a nest egg for the kid, for their business, for their trip, down payment on their home? Yes. There are so many cultures who put away something for the children. That could be, I'm planning to pay for a wedding one day. I'm planning to either pay for a honeymoon, or I've heard different friends I've met, in my lifetime say the parents said that I could either go on a dream honeymoon or they would pay the down payment on my home. That isn't just, oh, wealthy people just do that. No, people who have financial planners, people who sit down with their spouse or partner, sit down and they discuss the future. My goal as a financial person is to make these things normal for everyone because it can be. We can do this. If you look throughout the Bible, when someone would get married, the family would give money. It was an exchange. And, a lot of people think that 18 kick the kid out of the house, but would it be wise to put an 18-year-old out or think that the 18-year is an adult if they have no practical money skills? They've not worked anywhere. They've not been shown how to manage their money. There isn't really a plan. They're just kind of wandering through life. Let's see if this happens. Let's see if this works. If we have the opportunity to establish that type of relationship with our children, we are communicating with them, watching them. We're trying different things. We're putting them in this extracurricular activity, encouraging them to join this club or organization, and we're figuring out who is this person, right? Tabitha Brown, really like her. I hope everyone knows who Tabitha Brown is. I think she's amazing. She said that it wasn't her job to tell her daughter who to be. It was her job to make sure she guided her into becoming whoever God has desired her to be. Does that make sense? So if we're getting to know the people in our home, then we're going to know, should this person even go to college? Maybe they should go to trade school. Maybe, watching the kid, they really like the outdoors. Let's see what we can do. Maybe you should be in Girl Scouts or Cub Scouts where, they do these things. Let me check around town to see what organizations does the parks have, the museums have. There are so many resources, so much more than what we had when we were kids. So if your child wants to be whatever, there is a space for them at a young age. It's amazing to me, but we have to have that on our minds. And I'm living proof that I always tell my kids, we share this life. So I can do me and I'm going to help them do them until they can do it by themselves. So that was a lot. But as I said last Monday, money is life. Life is money. Sit down and think about it. Even if you have no clue of how you would find $50,000 today, write it down. I have notebooks and I was looking over there because I love different journals and things. And I purchased this book from one of these not Family Dollar. The Dollar Tree owns a store and I can't think of the name right. Pop Shelf. And they had this planner. As a matter of fact, let me show it to you. This budgeting planner. And I thought it was so cool because it has weekly budgets. And I said that I was going to use this not for my real expenses. This was going to be my dream book. It only costs $5 and it's cute. It has similar to my brand colors, my brand colors. And so this is going to be my dream book. Get something like that, even if you just use plain old notebook paper, something around the house, and start to dream. Write this down, okay? Next, we have D for debt. And this is important because you want to never leave loved ones to have to deal with debt. Again, because this is what I do, I meet with people a lot and, they share with you their story because, again, money is life. And it was shared with me by a client that when the father passed away, he was an attorney who always had money, always well off, and did not share that some way, somehow got into a lot of debt, owed a lot of people. And so when he passed away, he left one of his children in charge, and she had to fend off debt collectors, not just personal, but business, and not having a clue of where to start. So can you imagine the mix of emotions that this person was feeling, mourning the loss of a father, but completely overwhelmed, frustrated, confused, and upset because you left me. You didn't leave me a legacy, you left me a mess, and I do not know what to do. We don't want to leave our family members with debt. It's enough to have to get over them, to mourn them. Let's leave our family members something to kind of, give them a little cushion, a pillow. Allow someone to pay for counseling so they don't pass trauma on to their children. You think about it. We all want to be much, much older, see some grandkids before we pass away. Can you imagine, leaving your family with a mess and then their children watching them go through that? Folks, I've lived that, and it isn't nice. It isn't nice, and it doesn't go away. So we're going to if we don't have life insurance, you're going to contact me or contact that person that you already know, and you're going to go on and put that in place, because we have to be forward thinking. We have to be thinking about who's coming behind us. That's kingdom minded. We all love and, hold Dr. Martin Luther King in high regard. And he talked about the dream, and he talked about those coming behind him. We hold the John Lewis's of the world, Harriet Tubmans. They sacrificed their physical bodies for people who were to come. So we can never enter the selfish space of, I'm not here anymore. Someone is going to have to deal with that mess. So we're not going to do that, because we're kingdom minded in the Women Empowered group. We don't think that way. And if we know family, friends who think that way, we need to kind of in love say, hey, please don't make so-and-so have to borrow from their 401k or take from money that should be and their children, because that is what messes up a community. That's why families can't hold on to income. Like, you could Google it. How long does money stay in the family? Like, does it transition from generation to generation? And you will find that it doesn't. Okay. So Google it, read it for yourself. Debt, however much debt we have. And so we're going to total up these figures, and that is what we have as what's called income protection. When we can take care of all of that, that is income protection. When we only have like 25 to 50K, even 100K. If you own a home, most of us live in houses that are upwards of 300K or more. So, if you only have 25, 50, 100K, that will pay off the funeral. It'll pay off some debts, but really you need to leave instructions so people know what to do with the money. You should have a binder with all of your information in it. Passwords. I remember sitting down with my mom. She was sick, ovarian cancer, and we sat down and I put everything organized in binders. And I'm looking because my file cabinet's over there. I'm very anal about my file cabinet. Everything is labeled. So back to my mom, like, we sat down and organized all the paperwork. We had all the policies in one place. We knew exactly what to do. So when she did pass away, all we had to do was grab the binder. And because my mom was a teacher, and in the town that from, you know, I went to a Black owned, what is it, mortuary funeral home service. Look, it's Monday. I'm losing my words here. But went to Black owned funeral home. We had two in our town, and the other family, the ones who really ran the business, either retired or had passed on. So we went to the other, and he told me everything was taken care of. All we had to do was pick out what we wanted, because being that my mom was a teacher, you know, there was a contract between his business and theirs. They just sent the money over. All we had to do was pick it out, total it. He would send it, they would send the check. It was easy. So we could mourn. Like, I just can't tell you how important it is to allow family members to take a breath, because once all the people leave, it's quiet. You're forced to face things that maybe you did not have to because there was a lot of people around, you know. And when it's quiet and then there's no money and you don't know what to do, that's awful. So it's like, I'm grateful that my mom, she was on point with so many things, like things that we didn't even know. So I'm talking about the things that I sat down and helped her organize. She had little secrets up her sleeves, you know, in addition to what she did for us through the policies, and, you know, 4 girls. And so, you know, it was a blessing. And so, you know, of course, we love our mom. You know, she raised 4 of us after my dad passed with only insurance on his job. And remember, we talked about that. We talked about, and this is a quick review before I jump in to what I'm going to talk about tonight. But remember, on the job, you have a certificate. You don't have a policy. So that's a certificate. Your employer owns the policy. I abbreviated there. Your employer owns the policy. There's fine print that you need to read. So many exclusions, like death. What kind of death can you have? You need to look at dates, times. You need to find out if I'm on maternity leave, sick leave. What if I'm furloughed? Do I have insurance for these events? Make sure it's not accidental death. I've had people to fax me over, or not fax, more like scan and email, right, in 2023. But I've had people to email me their information from work, and they were excited because it's saying things like 10 times my salary, 20 times my salary. And I'm reading it and I'm like, that's accidental death. That's not life insurance. You just have accidental death. So if you pass away by accident, depending on what it says you can die for, they're going to pay this out. That's not life insurance. Accidental death and life insurance, that is 2 different things, because if it's not an accidental death, they're not going to pay out. So, you know, this looks great, 10 times my salary, 20 times, but is it accidental or is it life insurance? Okay. So today we're going to talk about whole life insurance. And I started out last week by saying that, you know, whole life is what we know, I think, a lot within the Black community, because that's what grandma had, grandpa had. Whole life, you know, I'm going to be upfront. I'm not that big of a fan. If you have it, you know, praise God, but look at your policy. You need to read your policy. So with the whole life policy, you have 2 parts. You have 2 parts. There is the life insurance part, and then there is the cash value part. The cash value is not money. So it's not money, it's value. Why is it that? Because when a person passes away, you can only get the face value. Well, you have to choose between the face value or the cash value, okay? Because it's separate. You may notice if you have whole life or you know someone with whole life, you're paying for two different things, and that's the investment and the life insurance. So you're making two payments in one. So that's why sometimes it could be more money than the term. Because remember, with the term life, you're paying for pure insurance, just like your car insurance, just like your house insurance or home owner's insurance or renter's insurance. If there is no claim, nothing happens. It's supposed to be in case of. All right, so let me recap. Whole life, there are two parts, life insurance and cash value, okay? When the insured, the person who the insurance is on, when the insured passes away, the beneficiary purchase $1 million in insurance, and I would like in like when I pass away, I want to leave it to my sister. The sister is the beneficiary. So that's just an example. So with the whole life, you will have a beneficiary just like any insurance. However, that beneficiary of the whole life will choose between the cash value and face value. So let me show you this. Let's just say you have a whole life policy of $200,000, okay? Your cash value, because you haven't had, let's just say you've had the policy for a while, and your cash value, let's just say it's 100K. You pass away, and your sister, who is the beneficiary, turns in the death certificate, and the insurance person says, okay, the face value is 200,000. The cash value is 100,000. Which one would you like? And so your sister is smart, and she's going to choose the 200,000 because it's more. Now think about that. You've been paying for this every month, one payment being split into two, one for the insurance, one for the cash value, and you have 100,000 in cash value. So look at this. When your sister chooses the 200,000, and you're saying, okay, well, where does the cash value go? The insurance company keeps the cash value. So in a sense, you're only getting 100,000, right? Because you gave them 100,000. So you paid for it. You paid it up. Does that make sense? You essentially paid for it. You funded your own insurance, because you didn't get the cash value back. So really, they're only giving you 100,000. Does that make sense? If it doesn't make sense, put your question in the comment and I will respond. Also, what I want you to look at is this. With the cash value, this investment, your money is capped. Your growth is capped at whatever interest rate that's in the fine print. You have to ask. So for example, let's say the market is doing 12%, 9%, 10% overall, but you're investing your money with your insurance company. So while the rest of the world is getting the 9, 10, 11%, whatever it is, you're only getting 4%. And you may say, well, why would they only give me 4%? Why would my percentage, my interest rate be capped? Because they have to make money too. Does that make sense? Right? Because if they let you have what everyone else has, they're not going to be in business long. So it's capped. When you have a financial planner who has access to investment companies, so who has heard of Fidelity? Who has heard of Invesco? Who has heard of American Express, Merrill Lynch? Goodness, there's so many of them, but these are investment companies whose the individuals who work there, and they go by 1,000 different names. Just, Google, pull up your thesaurus and put in financial planner. It's so many different names. The individuals at these companies have securities licenses. These people go and get licenses so they can give you advice on who to invest with, mutual funds and stocks, and it's so many investment vehicles out there, and they will be able to figure out what your risk level is. What are your plans? That's why I said it's so important to know where you want to go, because a person who works within the field of financial services, they should be helping you plan out life. No, we can't plan everything out to the T, but we can put our best foot forward, right? You don't wait until 55 and then say, oh, I want to retire 10 years from now, I better start investing. No way. We ought to start as soon as we start working, which is why it's so important that we are letting our young people in our lives know these things, so they're not getting to the point of, they're seeing it right in front of their face, and it's nothing they can do about it because the time never stops. So we start investing early so we don't have to be so concerned later on. Even with the market going up and down, you ride it up and down. There is no other way for us to prepare for retirement other than investing. So back to this, because I got off on a tangent, but it's important. When you invest with the insurance company, your growth is capped. You're not going to get the other interest rates like you would with an investment company, because this is what they do. Now, I typically ask people who come to me and they, we're talking about their whole life policy, and they say to me, well, I can borrow this. And it's like, yes, you can, but why would you want to borrow from money that is supposed to be used for the future? And then why do you want to borrow? When you borrow from your cash value, you have to pay it back with interest. Isn't this supposed to be your money? So why are you paying interest on your money? You have to ask yourself if it's indeed yours. Also, let's just say, going back to this $100,000 in cash value. Let's just say you borrowed $100,000 and then you decided not to pay it back because, you can do that. When you pass away, they're going to deduct that $100,000 from your $200,000 face value because you didn't pay it back. So when you go in, when you pull your policy, if you have a whole life, you need to read the fine print. The other thing too, some of us have policies that are term life that will convert, and they're going to convert to a whole life, and then your monthly premium is going to increase. These are the things that we have to look at. These are the things we need to know so we can ask the question. So whole life insurance, two parts. You have the life insurance part, then the cash value, which is not real money. Now, if you want to take it out, let's just say I want my $100,000. We're using this example. You would have to end the policy to get all the money. And then guess what? You don't have insurance anymore. Make sure you're reading the fine print. So some people may have had whole life insurance policies that their grandmother purchased for them or their mom purchased for them when they were young. And so now that they're in their 30s, maybe 40s, they probably have a nice penny in their cash value. It's, because it's been so long. But if you were in with one of the investment companies with a financial expert who can tell you where to move the money, what to do with it during this time, who's looking good, what mutual funds are looking good, you would have a whole lot more than what's in that insurance with the insurance company, because it's an insurance company. It is not an investment company. Ask your person, do they have a securities license? That's important. You don't want people investing your money who are not licensed. That's big. Same thing. Would you go to a doctor who did not have a medical degree? If you found out that the pediatrician treating the children never went to school, I would be a little concerned. I would be concerned if someone was handling my money who did not have a securities license. It's important, okay? Now, I'm not saying never do whole life. I'm saying you should be aware. You should know what questions to ask. My policy's term, does it convert? What is the interest rate? How fast is my money going to grow? Here's another question for you that a lot of people do not know to ask. When I first open up this whole life policy, how many years is it going to take for my money to start building up? Because in a lot of the whole life policies, you're not going to see any money in your investment for the first sometimes 3 to 5 to 7 years. Look at the policy. And you may say, well, where is the money going? It's called commission to the agent. And that is a true statement. Whole life insurance agents make a whole lot more money than those who do term, because that money is not there. Now, those are little industry secrets. No one's just going to come up and share that information with you, but I'm telling you because you should know what's going on. Now, I have a financial services person. I know they make commission off my investments. I know that when I went to purchase my policy, I know that that's how they got paid. And I had no issue with that because people don't get into business to not get paid. I was happy to pay it because they know what they're doing. They're experts. They're licensed. Take the money as long as you're helping me. Know who you're working with is all I'm saying. Ask the questions. If they're looking out for your best interest, they'll be completely open, just as I am when I meet my clients. We talk about it all. It's important, building up your clientele. You want them to bring back, kids and friends, and these are the people, we play soccer with, play baseball with. Hey, let me tell you about her. This is what she does. So, integrity is important. So you need to ask the questions, get the responses so you know to ask more questions, because this is your money we're talking about. And if you're putting your money in investments, you need to speak to this person often. You need to be checking up on your money. There are things that are going on in the economy that, a financial expert is going to know. You want to check in. How does this affect my investment? You think about when the real estate market crashed back in 2007, 6, 7, sometimes around there. A lot of people were affected. Things like this happen in life, but you're going to need someone to say, hey, hang in there. Market goes up and down, or let's transfer your funds over here because this is stable right now. You need someone who's going to say, hey, you're getting started a little later in life, meaning age. We need to take more risks because we need to make sure we can get bang for the buck, because time is going a little fast for you. These are the conversations that a good financial planner is going to have, and they are going to want to know what your plans are so they can give you sound advice. So if you do not have someone, you have to get someone to help you. You have a lot of people who are self-taught, they jump on Marketplace, Wall Street Journal. There are so many different great online sites out there. NerdWallet is another one. I've used that since my early 20s. I've told you all I've been into this for a long time, and I read the articles. Today I was reading on Marketplace. They had an article about like 10 stocks that were looking good, even with things, being the way they are right now. And hey, I'm like, oh, well, I need to read this and let me take a look, and then let me go on my stash and see what they have, see how much it is. You know what I mean? So I'm not giving you any stock advice. I'm just saying there are sources that you can read, and you can make your own choices if you do not have a financial person. If you're looking for an investments person, comment below or send me a direct message, and I will put you in touch with someone who can help you out in that area. Because again, it's important, just like it's important for us to have a doctor, it's important for us to have a financial planner. And better yet, get them to sit down with the kids. That's a family meeting after you do, I would say, the initial, based on the kid's age. But like if you have a 15 or 16-year-old who's starting to work, it's time to pull them in. This is amazing because you are planting seeds. And then when they're older, they would have already started a financial plan, or it's in their mind to know that I need to have this. You can change the trajectory of your family tree. Amazing, right? What you can do today, April 24th, you can turn it all around, and you can watch the seeds being planted in your house. If your aunt or uncle plant seeds in nieces and nephews, if you have nieces and nephews who are in their early 20s, it's time to talk about insurance. Gift them with a policy. The younger they are, the cheaper it is, and they will pay the same rate. Remember, we talked about terms. They'll pay the same rate for that term. And then when it terms, let's say 20 years for a 18-year-old, 20 years, they'll be 38 years old, assessed at the age of 38. No health problems, they're in good health. It's not going to go up a whole lot. Do you see what I'm saying? Start early. So I shared a lot of information. As I said, if you have any questions, please put them in the comments or send me a direct message. I always appreciate your time spending with me, being patient with me as I get into all these different going off on the tangent. I know it's like, wait a minute, now you were talking about this and you've gone off over here, but sometimes you just got to let it flow. It's important to get it all in. Thank you for spending time with me, and I'll see you next Monday, Money Conversations with Mars.
Ain't ashamed of trying to make a wage now. Money, 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 money makes the world go round. I need money, money, money.